welcome back to the Dukascopy studio. I'm Monica Gibson and today I'm joined by Jean-François Owczarczak to discuss some of the most traded currency pairs. Now Jean-François, thank you very much for coming in today.
Thank you for having me, Monica.
No problem. Now, most of the volatility regarding currencies has been from the tail risks emanating from Cyprus. We've kind of reached a bit of a deal. There's some progress perhaps, but it seems as though the focus may now be not on Cyprus itself, but on the broader implications. What is your take on it at the moment, Jean-François?
Well, basically I always like to go into the charts, and we're going to look at the dollar pairs, and we're going to take a bit of a look back and look at them on a daily basis. And so we're going to look at all the dollar pairs, and what we see here is that pretty much most currency pairs are still consolidating down against the dollar, hence the bear signal here on the Australian dollar, on the euro, on the pound, on the New Zealand, and for the currencies quoted where the dollar it's quoted in the direction of the dollar, you have bulls almost all over. So for the time being, we are still in a downtrend on most currencies against the dollar. And what we want to see if the Cyprus effect is having a short-term correction of potential. What we were saying last week is that, and let's focus on the euro, is that euro was in a correction down on the daily basis. That means over from the top over the next couple of months. Now if we look at this chart, we've initiated this correction down at the end of January, beginning of February, and now we're slowly getting into the target zone of this correction down. Now the question you might want to ask is that is this correction over now that we've made it into this target zone? The target zone is pretty long, and it still has a bit of time to go until we could really call it to an end. And the potential, although we've came into the initial zone below 130.70 here, you still have potential down into the 127 level. Now, to be able to justify a strong correction up here, you really would need to see some traction on the hourly. Now, if we look at the hourly, last week we were saying that we basically had a lot of very strong oversold condition, but given the bad news from Cyprus, you probably would see some kind of a status quo. That's pretty much what happened. It stayed very, very flat. Now, the impulsive move down is pretty much done, but you still haven't seen much of a reaction up on the hourlies here. And so for the time being, we would remain quite negative until we can prove that we can make it above the 130.65 level. What would be an initial step is maybe go, and we'll just go into the trader's view, which is a shorter term view. So the trader's view shows a 60-minute, a 15-minute, and a 4-minute chart. As you can see, labeled 1, 2, 3 here, and with the perspective, the 1 being the longer perspective, the 2 being the 15 minutes here, and the 3 showing this small window here for the 4 minutes. Well, we did correct up last week after an initial move down. Pretty much the move stayed pretty flat, and we've reached, if we look here, the corrective up move was done. Following this exaggeration, we had a correction up, and we pretty much came into the target zone here. What's interesting is that we didn't really make it well above this corrected target, and that we are already quite high on the risk level, which is already in the red. So now if we zoom out, we could see that we're pretty much in a resumed downtrend on the 60 minutes, which leads into a downtrend on the 15 minutes with a bear and targets down, and which is still in the bear on the 4 minutes. Maybe a short-term reaction here, but basically we were pretty much flat last week. Risk came up, and so there's not much potential or traction up at the moment. So if we go back to our investor's view here, well, we're still in a downtrend on the hourly, and we haven't proven much, which probably means our daily still has some time and a bit more potential to go on its correction down. Now, it's probably interesting to have a look at other pairs against the dollar to try to compare, because the euro has been quite hard to time, because basically it's remained very flat over the last 3 weeks. So let's go back to the mosaic and maybe have a view at the mosaic on an hourly view.
Okay.
And on an hourly view, we could have a look, for example, at the Australian dollar, which has had a very nice reaction up. And so if we click on the Australian dollar here, well, it's correcting down on a weekly. So it's not a strong downtrend, but it is in a correction down, or at least sideways. It's correcting down on the daily, following some exaggeration here, similar as to what we have here on the weekly. And from this first leg down, it initiated at the beginning of March a correction up. Now what we could see in this correction up is that it's slowly coming to at least what is an intermediate top. Basically we're in the red here on the risk index. We see our two envelopes touching each other, which means the short-term trend has gone too quickly in comparison to the long-term trend. And we're slowly getting to a point where the targets have been reached. There's probably a bit more time to go, but basically the risk-reward here on Australian dollar against the US dollar is pretty much showing us that there's probably not much more in this correction up over the next couple of weeks. Okay. So that would probably mean that Australian dollar could get into a correction mode against the US dollar, and as with other currencies against the US dollar. Maybe have a look at the trader's view. What we see here is that we're still up on all two frequencies here in the 60 minutes, but we're slowly getting into the target zones. And here short term, well, there's a lot of stress. No significant target, but we're slowly turning. So we would argue that over the short run, this move up, which we see on the investor's view here, is slowly coming to an end. Now how does that relate to another pair, which is pound sterling, which we also had a look last week? And pound sterling, well, it's still in a strong downtrend. We had a lot of stress here, initiated a correction up. Correction up does indicate that there's probably more potential to go, but bear in mind, we just barely made it above the corrective target. Usually it means that there's a 70% chance that we could reach impulsive targets, but it also means that there's a 30% chance that we'll probably not reach them. So we're a bit at a very trigger zone here, and it's probably a good idea to have a look at it on a shorter term basis. So let's look at the trader's view. And the trader's view basically tells us that on the 60-minute charts we're pretty much well priced, and that a correction down is starting to materialize over the short term. So if we sum it all up, and maybe the good graphic to look at is go back to the hourlies on the mosaic. Well, the correction up over the last few weeks for the currency pairs, which only triggered a consolidation up on the euro, or a flattish consolidation on the euro, is slowly seeing its potential being done on the Australian dollar. We've reached an initial target. We could ask ourselves if we're going to make this impulsive target on the pound, and we haven't really seen very much of a reaction on euro dollar. So we believe that at least over the next couple of days we should correct down. Now window dressing is coming at the end of the week, and that probably means that although we're a bit more negative over the next few days, if we look at the 60 minutes, pretty well priced here, finished the correction up here, well priced here, we should see these currency pairs holding against the dollar towards the end of the month. Then, switching back to the longer term, we believe that these correction downs are not over, and they will probably resume their trend.
Jean-François, thank you very much for your insights today. Very interesting and very useful to our viewers, I am sure. Thank you.
Thank you very much.
Well, that's all from Jean-François and myself. The TV team have plenty more interviews to bring you, so please do keep clicking back to Dukascopy TV. Bye for now.